As of my latest check, with the market currently open, Rezolve AI PLC, trading under the ticker RZLV on the Nasdaq, is priced at $6.56, reflecting a decrease of $0.24 or 3.46% in today's trading session. This movement comes amidst a flurry of significant developments that are creating a fascinating dynamic between market perception and the underlying operational realities of the company. On the surface, a single-day drop might trigger concern for those holding positions in Rezolve AI through their individual brokerage accounts on platforms like Fidelity or Robinhood. However, to truly understand what's happening with this stock, we need to look beyond the immediate intraday chart and examine the powerful currents swirling around this AI-driven commerce solutions provider. The immediate expectation, seeing a stock in the red, is that something is fundamentally wrong. But the reality is far more complex and, for the discerning investor, potentially much more interesting. The prevailing narrative surrounding Rezolve AI has been one of explosive growth and boundless potential. Just recently, the company shattered analyst expectations with its first half 2025 results, reporting a staggering 426% year-over-year revenue increase to $6.3 million. This wasn't just a top-line beat. Their gross margin came in at an astonishing 95.8%, far exceeding the consensus estimates of 60 to 70%. This kind of performance is what gets investors excited, and it fueled a significant run-up in the stock. In response to these stellar numbers, Rezolve's management didn't just meet expectations, they vaulted over them, raising their 2025 annual recurring revenue (ARR) guidance to a minimum of $150 million and initiating a 2026 guidance with a $500 million ARR exit rate. When a company projects that kind of trajectory, it's easy to see why many who self-invest online using platforms like SoFi Invest or Interactive Brokers would be drawn in. The expectation becomes a straight line upwards, a belief that this is the next big thing in the AI space, a direct competitor to the likes of Nvidia stock in terms of growth potential. However, the reality of the market is never a straight line. The recent dip we're seeing today is a reflection of the inherent tension and skepticism that accompany such rapid growth projections. While the bulls are pointing to major enterprise client wins, names like H&M, Urban Outfitters, and Ferrero, and strategic partnerships with tech giants like Microsoft and Google as validation of their scalable model, the bears are raising questions about the sustainability of this growth. A short seller report from Fuzzy Panda Research recently cast a shadow, citing concerns over valuation and cash burn. This was followed by a law firm announcing an investigation into securities claims, adding another layer of uncertainty. This is the crucial counter-narrative that challenges the simple to-the-moon expectation. It forces investors to question whether the impressive ARR figures are as durable as they appear, and whether the company can manage its expenses as it scales. The stock's movement is now a battleground between those who believe in the long-term vision and those who see potential cracks in the foundation. It's this very conflict that creates opportunities for those who do their homework. Let's delve deeper into the recent market activity to understand this dynamic. The trading volume for Rezolve AI has been incredibly high, with the average volume over the past 30 days sitting around 26.41 million shares. This indicates a high level of interest and active debate among traders. We've seen significant call option activity, suggesting that many are betting on a continued rise, even with the recent pullback. 6 different investment firms recently raised their price targets for Rezolve AI, with some, like H.C. Weinstein, setting a target as high as $10. This analyst consensus is a powerful force, creating a floor of expectation for many investors. They see the institutional backing from firms like Citadel, BlackRock, and Vanguard, which collectively pushed institutional ownership above 10%, as a strong vote of confidence. This is where services like Schwab Intelligent Portfolios might start to take notice, as their algorithms are designed to identify stocks with strong institutional support and growth indicators. But what does Rezolve AI actually do? At its core, the company provides a suite of AI-powered commerce solutions, branded as the Brain Suite. This includes Brain Commerce and Brain Checkout, which are designed to enhance the online shopping experience for major retailers. Their proprietary large language model, Brain Power, aims to go beyond simple site search and product discovery to increase conversion rates and average order value. They are positioning themselves as the essential infrastructure for what they call Agentic Commerce, where autonomous AI agents can handle everything from search to transaction and fulfillment. This is a compelling vision, especially in a world where e-commerce is constantly seeking an edge. The company is also making inroads into IT and HR service management with AI-driven automation, promising to eliminate the need for Level 1 support and auto-resolve a significant percentage of internal support tickets. This diversified application of their AI technology is a key part of the bull case, suggesting multiple avenues for growth. Comment below with your thoughts on whether a specialized AI for commerce can truly outperform the more generalized models from the tech giants. Looking at the financials, the picture is one of high growth coupled with significant investment. While the revenue growth is undeniable, the company is still operating at a net loss. For the first half of 2025, the adjusted EBITDA was a loss of $17.7 million. This is better than the consensus expectation of an $18.7 million loss, but it's a loss nonetheless. This is typical for a high-growth tech company that is heavily investing in scaling its operations, expanding its sales force, and pursuing acquisitions. The key for investors is to determine when the company will reach profitability and whether its current cash position is sufficient to get there. Following two financing rounds in the third quarter that brought in a total of $250 million, Rezolve reported having approximately $230 million in cash on its balance sheet at the end of September. This provides a significant runway to execute on their ambitious growth plans. So, what does the future hold for Rezolve AI? The path forward is likely to be volatile. The expectation of reaching a 500 million ARR by the end of 2026 is incredibly ambitious and will require flawless execution. The company will need to continue signing on new enterprise clients at a rapid pace, while also expanding their relationships with existing ones. The partnerships with Microsoft and Google will be critical in this regard, as they provide both the cloud infrastructure and the go-to-market resources to reach a global customer base. The success of their Brain Power LLM, particularly its claim of having effectively zero hallucinations, will be a key differentiator in a crowded AI market. The competitive landscape is fierce, with established players and a constant stream of new entrants. Rezolve AI will need to continually innovate to maintain its edge. For investors on platforms like Fidelity, Robinhood, or SoFi, this means that Rezolve AI is not a set-it-and-forget-it type of stock. It requires active monitoring of their quarterly results, client announcements, and any further developments in the competitive AI landscape. In conclusion, the story of Rezolve AI is a classic tale of high expectations meeting the harsh realities of the public markets. The company's recent performance and audacious growth targets have created a powerful bullish narrative. The staggering revenue growth, impressive gross margins, and backing from major enterprise clients and institutional investors paint a picture of a company on the cusp of something big. However, the reality is that this journey will be fraught with challenges. The scrutiny of short sellers, the pressure to maintain its growth trajectory, and the ever-present competition in the AI sector are all significant hurdles. The recent intraday dip is a reminder that the path to a 500 million ARR is not a foregone conclusion. The tension between the incredible potential and the significant risks is what makes Rezolve AI such a compelling and potentially rewarding investment. For those who can look past the daily fluctuations and focus on the long-term execution of the company's vision, the current price point could represent a valuable entry. But it's a decision that requires a clear understanding of both the immense opportunity and the considerable risks involved. If you found this helpful, don't forget to like and comment your thoughts. Let's discuss. Disclaimer: this is not financial advice. Please do your own research before making any investment decisions. Trading involves risk, and you could lose